Our next guest says AI isn't the only reason tech stocks are soaring, though. Let's bring in Michael Kantrowitz. He's chief investment strategist with Piper Sandler. Michael, it's great to see you. What do you think? Fed pivot, Fed pause? What's really going on here?
Well, I think it's that, and I think that got started getting priced in back in October of last year. But I think besides the banking crisis, the AI excitement, I think lower energy prices is going underneath the radar as one of the biggest drivers of this multiple expansion in the market. Obviously, it's decelerated the concerns around inflation. And it's been a major reason that I think you've seen some consumer resilience in the last 6-8 months.
Explain that, Michael, if you could, because I think a lot of our viewers are not going to understand why you might say, well, you got gas prices coming down, so that means that's good for tech stocks, right? It's not an intuitive leap to make that connection. Explain why you see that.
Sure. When we look at all the industries in the S&P 500, software, semiconductors, and tech, and cyclicals like financials and banks and material companies, and at the tail ends of the industries that are most sensitive to energy prices, in terms of their relative performance, it's technology and software names that tend to benefit the most when oil prices are falling or when rates are coming down, which typically kind of coexist together. And the flip side of that is obviously the energy sector, which has been the worst performers. So software and semis are among the two best performers since October, where tech's the best sector, while energy is the worst sector since October. So, I don't think we're going to see another massive drop in oil prices without some further economic pain. So I think it's an important acknowledgement that has helped part of the story.
So I don't want to be ghoulish here, but I do want to ask you about these layoffs that we saw in the tech sector earlier this year, right? A lot of reports throughout the beginning part of this year of thousands of job cuts all throughout tech. And I wonder what you think about the impact of those. Did that sort of lighten the load for some of these companies? They were able to capitalize on that and move forward in a more streamlined way?
Well, I think certainly that's the way investors have looked at it so far, as these companies had the ability to cut costs because they overhired during the pandemic. I think the view of the investors that, well, that didn't immediately spill over to broader areas of the economy, which we're now starting to see. We've got 2 back-to-back weeks now where unemployment claims are at about 260,000, give or take, and further signs of kind of broader deterioration in the employment backdrop. It's by far a concern among investors, but that can sneak up on people real quick when you look back at history.